Hello everybody and welcome to the 66th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. This week has been an action-packed week, although if one were to look at the overall market, it's been largely flattish, but no dearth of action as far as the international markets as well as the domestic markets which were concerned. We had a lot of developments like US markets where the crude oil touched new highs and they retracted back from those levels. We also saw the 10-year benchmark bond yield, the dollar index all moving up, and I think in the domestic markets also today we had the RBI Monetary Policy Committee meeting. So to take us on all the macro related developments, we have with us Jash. Jash, welcome to the show. Kindly take us ahead on these developments, and which will be followed by the sectoral outlook from my side.
Thank you so much, sir. It is great to be back after 1 week. We are here to throw some light on the whatever happened in the week in global and domestic markets. I'll be starting with the Nifty levels. Nifty had been consolidating. It did touch 19,200 and then went back to 19,500, 19,600. Today also, yesterday and today was a reversal candles it has made. We don't know the next week's action, but definitely it is a positive for the market. Last week we were very concerned on what was going to happen. The start of the week was still negative or under pressure, but the last 2 days have shown some resilience and showing some kind of strength over here. Coming to the global markets, the Fed did maintain status quo. They kept the rate unchanged, but they are very vigilant and they have a hawkish view on what is going to happen in the future. The crude oil did touch $97 last week, but it draw down to $85 a barrel today. So last 2 days have been it has been cooling off. The dollar index touched the all-time high and it has cooled off. Also, the 10-year benchmark bond yields were at 5%, which also kind of cooled off. So we saw some kind of negativity in the midweek, but towards the end of the week, it has become better. Coming to the Indian markets, we had the MPC meet, the Monetary Policy Committee meet, that they maintained a status quo at 6.5%. They also mentioned that they have been very vigilant with what is happening in the economy in the last 1 year, and there have been a lot of factors that the data that they have released have been supporting for a very robust economy. They mentioned about the inflation. The inflation 2 months ago that we mentioned of the fruits and vegetables was very high, but the core inflation has cooled off. The fruits and vegetable prices also have come down. So the core inflation has cooled off and it has come down. So that is something that is to look out for. Their policy, their status quo, they have maintained for growth, but also in line with their inflation targets to meet their inflation targets in the future. So I think they are going to maintain this for another few months before they start cutting the rates in the early next year or maybe mid next year or something of that sorts. So I think we need to wait over there, but the body language of the governor, the Shaktikanta Das, was very positive, and we think that this is going to lead into a very good festive season over here. That's about it for the domestic and global scenario. I'll hand over to Nirav sir for the sectoral outlook from here on. Thank you.
Thank you. So, as pointed out by Jash, it's been a hectic week, and of course, if one were to take the gist of some of the important pointers from RBI Monetary Policy Committee meeting, one pointer is that the business optimism and the consumer optimism that continues to be very, very strong. So now this is very good reading as far as the commentary is concerned. Business optimism as well as consumer optimism, that's quite strong. At the same time, the balance sheets of the corporates as well as the banking sector continues to be very, very resilient and strong. This is another pointer. Third is that the government spending has been very, very robust. As we all know, government has been spending quite heavily, and it's been all the heavy lifting which has been done by the government. So private sector capex has been lagging behind, but all these three pointers are very very important to understand what is happening in the economy. When the consumer optimism is high, the business optimism is high, I think we can expect going forward the festival demand as well as the wedding season demand to be very strong. Apart from this, I think the tourist arrivals in the economy, the domestic travel is picking up in a very big way. Consumption trends have been very very healthy. If one were to take into account the quarterly updates which have come, then they have also given us some reflection about what is going to happen. So we'll just try to cover some of the quarterly updates from the different sectors and what's the impact on the different sectors as well as the economy. First of all, we start off with the auto sector. In the auto sector, it's been quite satisfactory set of numbers as far as the quarterly updates are concerned, as far as the monthly updates are concerned. But markets generally they gave a thumbs down to the auto numbers, monthly auto sales numbers. I think stocks like Eicher Motors, Escorts, Kubota and Maruti also came under pressure because of the fact that Maruti did get an adverse draft assessment order for FY20. So I think auto got a bit impacted because of that, but I think overall it was a good set of numbers. The auto sector has been arguing that demand is expected to pick up, and strictly speaking the numbers cannot be compared because last year the festival season and this year the festival season has been postponed to November and December. So I think we will see some pickup in the auto sector. Overall auto sector continues to be positive. Yesterday Tata Motors GLR numbers have also been very very positive. The commentary has been quite positive. So this is the auto sector. Auto ancillaries also has been doing quite well. The next category is banking. I think this has been very very critical, and we had the quarterly updates which have come in from HDFC Bank as well as Bajaj Finance as well as a host of other banks. But I think as far as this week is concerned, the big winner was Bajaj Finance and Bajaj Finserv because of the fundraising initiatives. HDFC Bank has been under some sort of pressure of late because there has been selling by FIIs in the counter, but I think that the selling exhaustion seems to be over, and it is only a matter of time before we see some pickup in momentum as far as HDFC Bank is concerned. A core matter for the market is going to be the revival of the fortunes of the private sector banks. So that's going to be a critical thing to watch out for as far as the markets are concerned. The third sector to watch out for is the capital goods space. Capital goods space continues to do very well, and infrastructure has been a big gainer, as we all know. I think the biggest gainer of this week was Larsen & Toubro. Back-to-back 3 orders they have won in the different segments, whether it's a construction segment or whether it is the buildings and factories segment or whether it is a power segment, etc. So very very strong performance, and as we have said that government infrastructure spending has been very very strong, and that has played an important role in reviving the fortunes of the infrastructure sector. We have PSU stocks also which continue to do well. GAIL etc. have also done quite well, which has been a big gainer as far as this week is concerned. Then next we come to the FMCG space. In the FMCG space we had a kind of a conflicting views coming in from different companies. While Marico has said that they expect on the volume front as well as the value front, they expect low single digit growth going forward. However, they are expecting the margins to improve significantly because there's been a moderation in the input costs. So I think Marico giving one kind of guidance. We have Adani Wilbur which has stated that they expect the margins to be under severe pressure, but volumes have been recovering significantly. So I think divergent trends over there as far as FMCG companies are concerned. But today we had a very strong update which came in from Kalyan Jewellers. So Kalyan Jewellers is looking at a massive expansion also. They are looking to add some 33 stores in the next few months. So I think it's going to, and their commentary has been very very strong. So I think this augurs well, and we saw a spillover effect on Titan as well. The Titan stock was up about 3% in trade today.
It did hit the 52-week high as well.
Yes. So yes, Titan hitting the 52-week high also, and but I think still the quarterly update has not yet come in as far as Titan is concerned. But we are expecting something good to be reported by the company. The next is we saw some very good momentum from a few companies in the realty space also, because we saw Sobha Limited, Macro Tech Developers, that is Lodha. They've reported the best possible numbers, quarterly numbers reported by them in this particular Q2. And we've seen a positive impact or a positive spillover effect on the rest of the realty sector. So I think the realty stocks have also done quite well in trade. Apart from this, I think a couple of sectors which have been under pressure. One is the metals. Today morning, we have seen brokerage upgrades, international brokerage upgrades for the metal sector stocks. So the metal sector stocks did open in high spirits. They were up about 2 to 3% in trade, in opening trade, but gradually giving up the gains. But we feel that going forward can expect some upside in the metal sector space. Of course, it will all depend on the developments what are happening in China, etc. But overall, some positive sentiment at last being seen in the metals space. I think IT continues to be under a lot of pressure, and we've seen that this sector has been this quarter has been quite lackluster. Q3 is typically a lazy quarter because of the festivals, etc., Christmas holidays, etc., in US markets, etc. So I think FY24 is going to be a washout as far as the IT sector is concerned, and all eyes will be on the kind of deal ramp up which happens in FY25. So I think IT for the time being is going to be under quite a bit of pressure, but I think the gainers is going to be consumption. The gainers sectors is going to be the infrastructure, because there's a lot of rollout which is happening in infrastructure also, as we have been saying time and again. It's going to be defense, it's going to be railways, it's going to be power sector, the new age sectors, the new economic sectors, etc., which are going to do quite well in trade. As far as stock specific is concerned, I think LM's weekender stock idea, some of the stocks continue to do very well. We had Vascon Engineers, which achieved its target. We had Wonderla Holidays, which despite achieving its targets continues to move up further from the targeted price. And we are looking at a few sectors, stocks which are showing good amount of momentum, like Deep Industries or Coal India Limited, etc. The recently listed GSW Infrastructure gives us a lot of hope and potential. We see a very good amount of potential. So all those investors who are looking for the long haul can look to accumulate stocks like Geo Financial Services or the likes of JSW Infrastructure, etc. So to sum up, no dearth or lack of opportunities in the market. I think there are ample opportunities in the market, whether one is looking from a trading perspective or whether one is looking from an investment perspective. Exciting times for the Indian economy, and I think the important thing is to identify the right stocks, be in the right sectors, and stay patient and stay invested. A lot of other things to discuss, but of course time constraints permit us no further. So I hand over to Jash for the closing comments.
Thank you, sir. Thank you for the insightful session, and please like, share and subscribe, and stay tuned for next week. Thank you.